Now, I'm starting with a daily chart of the NASDAQ composite, and I want to address some emails I've got from members recently about talking about how they've been frustrated through this sort of chop that we've seen in the market over the past few weeks. And I understand that because we started to correct at the end of November, then we shot back up, and then we sort of undercut that low. And the past week or so has been this sort of holiday seasonal grind up, and it caught a lot of people off guard. And I want to address three things. Number one is accepting volatility and these sort of pullbacks along the way. Number two is to stay mentally tough and patient during these times. And number three, some ways to improve. So the first thing is it's just part of trading is accepting the volatility. Our goal is to identify, as we did this year, these sort of strong power trends. That's when you really want to step on the gas, when a lot of stocks are setting up and it's broad-based and breakouts are working. These are the types of power trends you really want to identify. But you have to accept that, even before this prior power trend last year, it was around before the presidential election, we're going to have some volatility and corrections. And then when the power trend was over, we also had some more volatility, sort of corrective action. And then we had a little bit here during that seasonally weak time at the end of September. We kind of anticipated that follow-through day, and even though it was brief, there was a really nice, powerful trend from middle of October, that October 14th follow-through day, into that middle of November period. But right now, it's just accepting that there will be times when the market pulls back and corrects, and you just have to be patient, maybe use some lighter positions to minimize those frustrations, and also to just maybe use the index, as I said, because the other frustration is how the indexes keep grinding, but a lot of growth stocks aren't working, so a way to make an adjustment is to have a position in the index to participate in that. The second thing I want to talk about is that mental toughness and being patient. There's a reason in the educational videos I spend time about making sure your mind is strong, and 90% of trading is being mentally tough and being strong during these times. So the point is, if you keep telling yourself, I'm frustrated, this market sucks, I'm not doing anything well, guess what? You're going to be frustrated and you're going to keep trading poorly. So part of this is accepting these periods. Don't beat yourself up. We're always going to make mistakes, but the key is to keep improving, identifying those mistakes, and making those, adapting and making those adjustments to improve and make progress going forward. The third thing I want to talk about is ways to improve. I put a free blog post out at joefahmy.com, 3 ways to improve your trading for next year. And it's kind of a watered down version, a blueprint of a lot of the steps that I talk about in the educational videos, which is first and foremost, I don't know if you did well, that's awesome. God bless. Stay focused, stay confident, don't get complacent, don't get overly cocky or anything like that, and just stay focused and keep working hard. But if you struggled, I don't know the different ways people might have struggled this year, but just some sort of general ways to help is, number one, stock selection. As William O'Neill says, that most people fail because they buy nothing to write home about stocks. So that's what I'm trying to do, is when we're in these power trends, is try to help identify some strong winners that fit the blueprint of the big winners throughout history, strong earnings and sales growth. And then the other thing is, too many people have FOMO, and what I mean by that is when things are running and after they've run, they feel like they're going to miss out. So entry point is very, very key. I've said this a million times because members have different time frames, that no matter what your time frame is, whether you day trade, short-term trade, swing trade, long-term, make sure to get strong entry points and don't chase extended stocks. And then a final component to that is managing risk, meaning that those sort of guidelines, if we break below the 50-day, 200-day, these are areas, once you lose that institutional support, you have to stick to a loss-cutting policy. A perfect example is, some people have told me, like something like Teladoc, when it broke earlier in the year, the 50-day, and the absolute line in the sand would be that 200-day for long-term holders. And then they come back and they say during the webinars, I know I'm supposed to have stopped myself out, but what should I do now? And I say, look, I'm sympathetic to that, but you also have to be able to execute and accept that you're going to take losses, and sometimes the market's going to go against you, or you might believe in a position and the market's going to prove us wrong. That's why you have to have a loss-cutting policy. Same thing with Upstart. Even if you get a gap below that 50-day, when a lot of people asked me about this one recently on the webinars, I said, look, that's an automatic stop. It's going to take time to repair, and then even if you got caught up in those earnings, you still, if you stopped yourself out that day, you would have avoided over 100 points of downside. So again, managing risk is another way that can hopefully be a guide to help you improve next year. Now, going back to the NASDAQ, chart of the NASDAQ, and kind of trying to anticipate what's going to happen over the next few weeks, I think we're going to get a much clearer picture in the first couple of weeks of January about the direction of this market. I talked about maybe this is some sort of a double bottom or a correction. Maybe we just digest this and then we'll get a clearer picture when volume comes into the market, if maybe we can clear this sort of 16,000 level in the NASDAQ, because over the past couple of weeks, it's just been that holiday seasonal, very, very light volume. And we need to be patient and let the market prove itself a little bit, especially from a growth stock perspective. I know a lot of people will say, what's the market need to prove with the S&P at all-time highs here? But I'm talking about for people who trade growth stocks, and a perfect example is ARKK, which is a basket of high octane, 50 or so high growth names. And this has really, really been struggling. So people who've been trading growth stocks know that beneath the surface, there's been a lot of damage. So we need to let the market prove itself over the next couple weeks. And I don't know if we're going to get clarity early in the year, but I'm curious when the volume comes in, what's going to happen, if stocks are going to keep setting up. But the key will be the Fed in the first quarter, because right now there's a lot of variables and a lot of moving parts, and we need to wait and see if the Fed is going to raise rates at all. If the market's maybe complacent right now, or if the market just is not buying the bluff that they're going to raise at all, or maybe the market has priced in a few rate hikes and is okay with that, or maybe the market's waiting for the taper and the liquidity that's being pumped in, and then we might correct. So you see there's a lot of variables here. I feel that the Fed's going to wait for the data in the first quarter, especially that inflation data, employment data, and so forth. And even if they do raise, it'll be one or two times, and then they will most likely pause or say that they're going to stop for a while, and then the market can stabilize from there. But rather than predict, let's just be patient over the next couple of weeks and wait and see, because it's really hard to get a good read with just such little volume. But what I do like is, even though we came off of this lows last week, so far this week, we're just sort of building a handle area here. And the good news is, when I screen tonight, there are a lot of stocks that are starting to form bases, not just in semiconductors, but some other things. So it's starting to be a little bit broad-based, but I still want to let the market prove itself, because if we end up forming these handles and we get some clarity and the volume comes in the beginning of January, and then we start to break out from here, this could be another one of those sustained power trends. So the way I'm dealing with it is, as I always say, it doesn't have to be all or none. You don't have to be 100% cash. You don't have to be on margin. You can meet halfway. I have some cash right now, because if we go higher and stocks set up, I have no problem making decisions and putting some money to work. And I do have some exposure now as well. But if the volume that comes in the beginning of the year, we start to see some selling and not a lot of stocks are proving themselves, at least I have some cash to hopefully minimize some of that downside volatility. But again, we'll take this day by day. I like to try to think ahead and try to, have a little bit of foresight and try to guess some of the possibilities. But at the same time, it's not really about predicting. It's just taking this day by day, interpreting the data as best as we can. But as I said, the good news is there are a lot of stocks setting up and building some bases. So let's go to MarketSmith and go into those, about 20 or 25 stocks right now.